Hello traders and welcome to another video review. Today is Wednesday, September 6, 2023. Let's take a look at the Forex economic calendar today. We got some data that were released overnight. Those data were mainly from Australia in form of the AIG manufacturing index and the GDP. GDP beats the expectations of 0.3% with the reading of 0.4, which is apparently in line with the previous reading. German factory orders data deteriorate even further, minus 11.7%, which is lower than minus 4% and which is way lower than 7.6% last time. S&P Global Construction PMI data from the UK are scheduled for release at 10:30. Retail sales data are scheduled from the Eurozone are scheduled for release at 11. ECB McCall will give a speech at 2 o'clock, and at 2:30 we got trade balance data from the US, labor productivity and trade balance data from the Canada, exports and imports from the US as well. Then later on we will have the key data scheduled for release. We have some comments from the Bank of England Treasury Committee hearings. We got comments from the German Buga Wurmeling, but then we are narrowing the time limit towards the 3:15, quarter to 4 basically. Global composite PMI for composite PMI, global services PMI, ISM non-manufacturing employment and ISM non-manufacturing PMI is scheduled for release quarter to 4 and 4 o'clock. The key event of today, except the ISM non-manufacturing PMI data release from the US, is Bank of Canada interest rate decision and the interest rate statement. As you can see, the market participants expect the Bank of Canada to hold the interest rate at the level of 5%. Now, narrowing the rest of the day, we got German Buba Balz speech at 6 o'clock, beige book of Fed release at 8 o'clock, and then 10:30 there is API weekly crude oil stock changes. So pretty busy day with plenty of the important data scheduled for release. But let's take a look at the euro dollar. Then we are going to take a look at the US dollar to the Canadian dollar and maybe crude oil. So let's start with the 4-hour chart of the euro dollar. What's happened here is like we are still moving lower and lower and lower. The recent low was made at the level of 1.0707, and we are now hitting the extremely oversold market conditions. If we place like a line here, we can clearly see that the market is trading below this short-term trend line resistance, and the recent swing low might be considered as very bearish indication, because we are keep making lower lows and we are keep making lower highs. Just look at this. So this is all in line with our big head and shoulders pattern that is available for a view here. Let me just remind you guys what I'm talking about. I'm just looking for this head and shoulders pattern. There you go. So basically what do we have here is the left shoulder. We got now, there you go, left shoulder, we got the head. Now here there was the right shoulder, and there is the right shoulder. Yes, there you go. And now of course we are just narrowing lower and lower. The target for the down move, if we just say we take the price range from the top of the head to the let's say to the breakout below the neckline, because that's the neckline, is minus 3.18%. So basically this kind of if we try to, let's say, copy this and we will take that measure, so you can see that in the ideal world the target is way below the current technical support, because the target would be somewhere around 1.055. So let me just leave you guys with this pattern here. Let me just place the potential target. This is not it's not certain that this target will be hit. It's a potential target measurement from the head and shoulders. So this is of course our swing low and the technical support, the key technical support, horizontal technical support. If you don't know what I'm talking about, this level is roughly around 1.0638, but the target for the head and shoulders is way lower. So let me just move it like let me make it red maybe, and that would be, there you go. So this is the head and shoulders pattern. I will make just a quick screenshot of this, and we can go to the next chart. So there you go. The next chart is US dollar to the Canadian dollar. So that's obviously one of the most important chart for today, because we got the Bank of Canada interest rate decision. So what is going on here? Let's start with the 4-hour chart. It's clear that we are going up. So the US dollar is being bought all across the board, and let's just switch to the daily time frame chart to see the perspective. There you go. On the daily time frame chart, we already hit the extremely overbought market conditions. There we got some kind of a pullback, and now we are back in the game. So the market is clearly diverging. Market behavior or price is diverging from the RSI indicator. So let's just take a look to on this chart to see where are the key horizontal, let's say for the beginning, horizontal resistance levels. So straight on we got this level 1.3658, and that's the technical resistance, and we are now about to test it again. We tested it yesterday, now we are about to test it again. Then we got, of course, swing high at 1.3861. The key technical supports are, of course, here at 1.3488. So that's the kind of a let's say this is the technical support, and we are just trading above the 50 periods moving average. This is daily time frame chart, so it's a kind of important right now. The 50 periods moving average is 1.3508. all right, so please pay attention to the behavior of this market when we hit the key technical resistance right now, not a swing high but the key technical resistance. So what I want to show you guys is this. Let me just copy that one. So we are just heading here, we are heading here again. So maybe, just maybe, the market participants won't be able to break it, but in a case of a breakout and a breakout higher, the next target is swing high. This swing high was made in March, in the beginning of March 2023, so it's kind of important to keep an eye on this as well. And the last but not least, if we talk about the crude, if we talk about the Canadian dollar, let's see what's going on the crude oil chart. So this is a 5 minute. We don't need 5 minutes. Let's go to the daily straight on. Why? Because we have another breakout to the upside. So that's clearly some sort of the bullish development. Nevertheless, there is again negative divergence, bearish divergence between the price is making new swing high, and the momentum doesn't make this a new swing high. We hit the extremely overbought conditions again. So where are the bulls heading? Where are they heading? It looks like, well, there is only one level here which is worth of noticing on a daily time frame chart, 93.74. This is the next key technical resistance, and this is where the bears are heading. The question is whether they will find enough power to get there soon. The technical support is now located at 84.88, and there's one more, so we have the zone. The other one is located at 83.42. So very nice zone here, located between those two levels, and definitely this market has a potential for another up move. Nevertheless, maybe not in this one wave up, not within this cycle up, wave up, but maybe we need some kind of a pause, we need some kind of a pullback here, and then there is a chance for the crude oil to go even towards the 93, and sorry, that was 93.74. all right, so bullish crude oil is bullish. The outlook remains bullish on the crude oil. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.